tax needs and more. Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. Later CPA and Associates, accounting done great by mates.
Hello there, I'm Daniel Later, founder of Later CPA and Associates, and welcome back to our ongoing series, Building a Successful Private Practice, from Beginning to Infinity. Now, I went to therapy to work on my anxiety, but it turns out it was mostly triggered by my bank account. All right, let's go ahead and jump into the topic this week. Now, this is the last session of this series for the year 2025. So thank you for everyone who's watched these, who's learned from them, and who's commented and provided me feedback. I really appreciate it. Now, this session is kind of the capstone, the crowning jewel, the last step of having a solid tax strategy. So let's get right into it. This builds on and assumes everything that's been talked about before has been considered or put in place or adjusted to fit your situation, but you have a strong tax strategy for your private practice or your group practice. So you're there. This is the next step. So we are talking about tax planning for passive income streams. Now, as I tell people all the time, passive income just means you worked really, really, really hard so that you don't have to work hard again. That's it. Passive income is a lot of work to set up, but once it's set up, it works for you and you're not working for it anymore. So if your private practice or your group practice is now running smoothly and you've been using a solid tax strategy already, this is the milestone. You're ready to start building your income that isn't tied to your calendar, to your time, to your schedule. So passive income, it's often what looks like when you're winning the tax game. Because now you're designing your money on purpose. So the goal today is to keep passive income simple. Understanding the few tax rules that matter and understanding the tax rules that mattered most and avoiding the common surprises, the unpleasant surprises. So let's jump right in. So first, why is passive income a next level move? Well, first off, it's very powerful because it helps you build wealth outside of your practice. It helps reduce the pressure on you of always be seeing more clients, always fill your calendar, and it creates stability and options for you over time. Now, this is a shift from making a living to now building a system. Now, passive income comes in a couple common forms. We'll just list those out for you just so you are aware that these exist. We're not going into too much details though. First, real estate. All kinds of passive income there. Not going into the details though. That's an entirely different long conversation. Real estate is passive income. Other investments. This is investing in the stock market, into dividends, into interest, etc. The things that require literally zero activity on your part. So dividends, interest income, etc. owning or being part of the ownership structure of another business that you don't own yourself, that you don't run. This might look like you investing into a colleague's own efforts into a private practice, being the silent partner, being the money partner, whatever you want to call it, but investing in them. They do the work, you reap the benefits, and they basically get to use your money. Last one is selling your assets. We've talked about this in depth in other talks, in other lives, so we won't talk about it here. But passive income can look like selling the things you've been owning and building up over time. So you don't need to memorize the tax law with regards to all of those different kinds of passive income. Just recognize what type you have, because each of those types can be taxed differently. Now, just to cover some of the most common surprises that we don't want, the unpleasant surprises, when you have passive income, you may have losses. You may have positive income, you may have negative income. Both are beneficial to you. But losses don't feel like they're winning to you. Not at first, but from a tax perspective, losses are really what you want. So, passive income, if we do it right, if you have a strong plan, and if you're creating a plan that can create losses for you on your tax return, use them. But here's the trick. Losses are not always claimable on a tax return. Sometimes they just build up and accrue. You can use them in the future, but you might not get to use them now, this year. If you're involved in real estate, losses is a real thing. It's a real built-in part of those strategies. So keep that in mind. Other other types of passive income like dividends or receiving interest or capital gain, losses is not so much a big part. Maybe you're investing in a colleague's business, whatever they're doing, and then losses can be a big part, especially right at the start. But losses help you on your tax return. A passive loss lets you partially offset other income that you're earning, thus reducing your taxable income. This is good. There's more to talk about losses. That's an entirely different, very long conversation. But just remember that. A tax loss, a passive loss, that can still be a very good thing. Now, some other surprises to be aware of, especially if you're involved in real estate investing of some sort. Real estate gets special rules. They get special attention. There's too many to go into right now, but if you're involved in real estate, you've attached yourself to one of the areas that has the greatest tax laws written specifically for that area. So keep that in mind. I will always recommend investing in real estate if you're comfortable with it, because the tax laws, the tax benefits are so great. Now, the main thing to remember is when you're involving yourself in passive income, other income streams, keep in mind the mindset of keep it simple. You can make them very complicated. That's not always a good thing. You can keep it simple, and that at least helps you to understand what your plan is, what your process is. Now, when you are thinking about adding a passive income stream, whatever it is, here's 5 questions I want you to think about. Ponder. What type of passive income is this? How will it usually be taxed, either now or later? What records do I need to keep it clean? What's the exit plan? You buying, or are you holding it? Planning to sell it, planning to trade up, etc. How are you going to get out of it eventually? And how does this support your bigger goal? Remember, passive income just by itself is a hobby. If you've got a big goal in mind, then it's support. It helps you get there. What is your big goal? Is your big goal to fully retire at 60, 50, maybe 40 and do no more work, not a day of work in your life? Then you need a passive income that's set up to handle that. What's your goal? Is your goal to build a miniature empire that you can eventually sell? Keep that in mind. That's a different passive income plan you want to set up. Or do you want to just continue living a comfortable life, keep working, but work a lot less until you're 70 or 80 because you think you'd get bored? Different kind of passive income for that kind of activity. So keep that in mind. Keep your end goal in mind and build your plan around that. Now, if you can answer those questions, you're ahead of most people when it comes to what your passive income would look like. So there's some easy stay winning habits I would like to share with you. First, keep a clean separation between the different activities. That means different bank accounts, different bookkeeping, different business entities that are set up. Keep them separate. You don't want them mixing. Plan your big moves before the year-end time. This goes along with tax planning too. Make sure you know what the plan is and prepare for that before. Treat your passive income like a strategy, not a hobby. This is not something you just doodle at on Saturday afternoons or when you're bored at work and you need something to keep you occupied for a bit. That's not a passive income stream. That's a hobby. Plan for it. Dedicate time to it. Like I said, setting up a strong passive income takes a lot of work to get it to be truly passive. So keep that in mind. Treat it like it's something you're investing yourself and your time in. And pardon me. And something that's probably just as important as all of those, coordinate with your CPA before you buy or sell or involve yourself with anything like that. They will know more about the tax effects, the tax implications of involving yourself in any kind of passive income stream, and they can help you set it up properly, avoid pitfalls that can potentially be very easy and very dangerous to make. They can help you with all that. So talk to your CPA. Now, a couple closing thoughts. Your passive income is often a sign that you've built a real foundation, a strong foundation. Your practice runs well, your tax planning, your other planning is working, and now your money gets to start doing more of the heavy lifting for you. As that old saying goes, make your money work for you, don't work for your money. That's passive income in a nutshell. Now, a critical thinking question I want you to ponder. If your passive income doubled next year, what would you need to do to be if your passive income doubled next year, what would need to be true for you to feel confident you're still winning at tax time with no surprises and no scrambling? Question to ponder. Now, if you have any questions about what we've talked about, passive income or anything else, feel free to comment on this video, DM me, however you'd like to ask. I'm happy to answer any questions you've got. Now, if you would like to schedule a free 30-minute discovery call with someone at my firm where we can talk about your tax strategy for you and your business, DM me. We'll send you a link to schedule a free discovery call where we can talk about just that, your tax strategy for yourself and your business. Now, if you have any, don't forget, follow, subscribe, like, whatever it is on the platform you're on so you can be aware of future events and tax tips that we regularly share. And visit our website, latercpa.com. I will see you on the next video. Have a great weekend and keep helping others to help themselves. And let us help you so you can do just that. Bye.
For all your tax needs and more, Later CPA's the one you adore. Later CPA and Associates, accounting done great by mates. all your tax needs and more. Later CPA's the one you adore. Later CPA and Associates, accounting done great.